So the current Bitcoin price is $19,730. It's definitely at a critical level today. And we all know that today is important because the US CPI inflation results are coming out. And we know that every time that happens, you can expect volatility. So as the tile or the thumbnail of today suggests, is it long or short into the CPI results? Well, that's exactly what we're going to cover today and more. I actually do have one chart which gives a little bit of hopium, at least in the next couple of months, and we'll go over all of that today. So first and foremost, I just want to start off with the high time frame chart over here. And you can see that Bitcoin is attempting to hold above that 255 MA, which is very, very important. We need to hold above that. And if price can push, especially if it can get back above the purple. Let's quickly see this comment. We all know the world economy is busy taking its toll. However, we assume that the market is going up from here. I really do think that we need, James, what did we need? You missed the rest of the comment. Yes, we do need to start being more realistic. Exactly. James loves putting on long stories during the show over here. So I'll try to address any comments that I can. Maybe we'll save that towards the end. But look, Bitcoin price holding above key level. We have the gray box area, still hoping for one last bounce in the short term before probably the next leg down. So I have a lot of important things to cover today. And it's all focused on that CPI inflation numbers. So expectation is at 8.8%. I did a poll on Twitter already. I think we have like about 2,000 people that have answered. What is your guys' expectations that it's going to be below, on par, or above? You can see actually the vast majority are expecting higher than 8.8%. So for those of you who are new here, just to let you know, anytime that expectation comes in above, then, or if the results are above what was expected, then the market typically will tank off of that news. And if it's on par, you usually have a short-term rally. It's kind of neutral. Nothing really happens. If it comes in below, then you can expect a massive rally. And I'm trying to use the charts to kind of assist with that. And we know from the previous shows that on the short-term time frame, we do have a series of higher lows, which are currently holding, but we'll look closer at that shortly. So one of the most interesting charts that I've found recently, they say that this chart kind of historically has given, I found it on my trading view, historically this chart's given an indication of when the Fed may pivot. So typically they start raising inflation rate, raise. And as you approach this top line over here, it's like an expanding megaphone pattern. Once you start to reach those top areas, then the Fed typically has pivoted and reduced the inflation rates, or the CPI numbers change, and therefore that leaves risk on assets with an opportunity to rally. So I'll be paying close attention to this over the next couple of weeks, because this is a monthly chart, so it's not going to play out immediately. Maybe what we'll see is them continuing to raise rates. This can basically push just above that, and then you'd expect that things will come down. And it comes from a guy on Twitter, the Happy Hawaiian. This is where I found it. I'm just going to quickly go through this to give you some sort of a summary, but he says, I'm overdue on updating the Fed pivot indicates, and frankly, it's showing that we have arrived already. We are at the point where the Fed would usually halt the rate hikes and begin easing again as they gear up for 75 basis points. Bear in mind that he did write this quite some time ago, or actually, this is very recent, 11th of July. He said, that this chart is essentially a proxy for the acceleration rate of the interest expenses for the US government, and has been a reliable indicator of Fed pivot for 30 years plus, as the Fed has ensured the US doesn't enter a death spiral. So the interesting part that I found over here was, to avoid this, the Fed would need to pivot very soon. Otherwise, they risk having to do even more easing and monetizing of debt down the road. To keep this line inbounds, they need the middle of the curve to fall to 75 basis points anytime between now and the 24th. So he seems to think that the Fed is going to pivot very, very, very soon. And that is what everybody's waiting for. All the sideline money is just waiting for the Fed to pivot before they start jumping into any, not just risk on assets, but all assets across the board. Alex Krüger, he said it's a fantastic chart on the Fed rates and the debt sustainability. And then he identified just a couple of things of concern or to look out for. He said, for perspective, if the Fed were to deliver on its intent to hike rates to 3.5% by year end, which is what he would expect, then that would put the ratio 50% higher at 995 on that chart, which could still be considered sustainable using this as a model. So 995, you can see we're at 647 now. 995 would come basically out of that chart over there. And then he says drawing lines in log charts is appropriate. The issue is small changes in anchor selection or angle can have a massive impact on interpretation. And this should be clear in the chart above as 1.75% FFR, which is the current level, and 3.5% FFR, which is year end, are two entirely different scenarios. So in summary, what I would say to summarize all of that is, look, we need to pay attention to this chart. Only recently came across it, and I'm definitely going to be looking at it going forward. Basically, I'll treat it like any other chart, right? You want to see a confirmed turn and angle downwards for maybe at least 1 month before you start adding to your super long-term portfolio. Once you see that and you know that the trend is completely changing, then it's game time. Basically, it's time to start aping into things again. And we're going to watch that closely. We can tie that in with what the DXY is doing as well. The dollar index, you can see again hitting that level, but it just can't break through yet. So the dash line is definitely acting as a very key level. I would imagine that when you see this start to deviate and turn back over is going to be the same time that you're going to see this chart act that way, and that would be a signal for us to go in. So looking at Bitcoin over here, very much the same as yesterday on the higher time frame on the 3-day chart. We are holding that key level, which is coming in on that horizontal. You do still also have the attempted MACD cross to the upside, and we need one more day and 14 hours to see how this closes. But if this histogram can close green with that cross confirmed, then I think that we could have our answer in if there is going to be a relief rally or not. And more importantly, when these results come out, literally, I think in the next 2 or 3 hours, that will probably be the most likely direction and give us the main indication. So this chart over here, haven't brought up the moon phases for a while. I thought it would be interesting just to let you guys know that usually it's every 15 days. So you're looking at basically the next one coming on the 14th of July, which is pretty much tomorrow, would be the so-called bull moon. I don't know if it's full moon or what it is. I think it's full moon. Yes, it's full moon. So that would be your bull moon. If you can hold the support line, that would look good. But remember, it's all short term. It's only good into the next resistance, which is going to be that 34 EMA. Clear that, and we're talking longer term changes. So with that being said, I did post 2 chart setups yesterday and updated them. There have been a couple of changes, and that is on the newsletter. So if I had to bring this up over here, subscribe to this. It is in the bio below. If you just click the link below, you'll get access to the newsletter. And this is where I give my exact thoughts with the identical levels. Make sure if you want the high quality one, you click on the screenshot over there. As you can see, that will open up the chart like that for you. And I give all my thoughts. I gave UniSwap as well as Bitcoin on the 4-hour. And let's catch on with that right now. So looking at this chart over here, I'm seeing 2 different scenarios over here, right? So we have made some adjustments to the trade, which I'm going to outline for you shortly. And for those of you, by the way, who are trading this with me, also the link in the description below, you'll find that there is a sign-up bonus for anybody that wants to join Bitget. So quick Bitget chill. I'm actually practicing on their exchange. I think that they have a lot of unique features, which hopefully I can cover in the future. So there is a link over there. But what I'm seeing over here is the main range, right? So you got range high, range low, mid-range. We have the diagonal trend line, which we were buying down here. I'll bring all those price labels and everything back up now. But the main thing that I'm watching and what I want to see for the bullish situation to continue is to reclaim above that mid-range. If you reclaim that mid-range, two important things are happening. Firstly, while you're reclaiming the mid-range on a lower time frame, you'll be making, for example, on the 1 hour, you'll be making a new higher high, and therefore you can retest that with a higher low. On top of that, you're reclaiming the psychological $20,000 level. Once that happens, most high time frame momentum oscillators start flipping back up and gaining momentum to the upside, which starts to create the opportunity for a real relief rally. So if I have to bring back all the other things that we had here, let's just quickly do that. I can show you the changes that have taken place. Let me just turn all of this back on quickly, because we have raised our stop losses, right? So now the trade should be pretty much break even. You can't lose, and you do want to eliminate risk going into everything with the CPI. Okay, let's see. We got everything perfect. Okay, so what I mentioned today as well in the newsletter is I said, firstly, cancel this buy order. We had a third buy order. Our final buy order was coming in at 19,025. Delete that, remove that, because if price comes back down to that level, we in trouble. Raise the stop loss. The stop loss was, I think, at about 18,750 or something. Raise that stop loss to 19,200 under the previous wick over here. I'm going to clean that up, delete that over there. So we have our two entries. One was at 19,929. The other entry was at 19,657, which was directly onto that trend line over there. And stop loss can come underneath here. If price starts to come back down, the way that I would see that is bearish. Basically, it would be a rejection off of the mid-range, which is not good, and coming down to set the next lower low. Once that lower low gets set, I would think, look, you haven't broken this level yet, but you'll probably build enough momentum to do that and come down. And of course, once those results come out, that's going to be the exact catalyst for however this is going to play out. At the moment, you've pretty much reduced your risk down to, you should only be losing, before we were working off about a 3% loss. Now you should be looking at anywhere between 0.5% to 1% loss, depending on your level of leverage. So that's essentially what I'm seeing for Bitcoin. Not too much else to add here. Let's just put the moving averages back on. Overall, remember, the risk still does remain to the downside because we stuck below all important EMAs. If price gets back above and reclaims those EMAs, again, like I said, all momentum oscillators will start turning up, and that will be a good thing. And you do currently have, by the way, the 4-hour Stoke RSI is starting to trend to the upside. Let's quickly have a look actually at the daily. So daily is still angled down. Let's go to 12-hour. 12 hours still, like yesterday, attempting to turn back up, and that 4 hour should give it enough room. 8 hour is currently up, and then 4 hour, which I just showed. Okay, next trade that I covered was UniSwap. So let's go over the UniSwap situation over here. There was also a couple of changes. Looks very, very similar to Bitcoin, right? You got your series of high lows, you got your higher highs. We had our entry price at $5.50 over there. Stop loss was underneath that wick and the 200 EMA. You can now move that up. I would say similar to Bitcoin, you don't want to see price come back down out of this diagonal trend. If it does that, most likely it's going to go lead onto lower lows. So consequently, move your stop loss up to $5.44. Not financial advice, but that's what I would do. If you cross this dash line over here, if CPI print is good and prices start to rally and you clear this area over here, I would anticipate that price should rapidly start to lead on to make higher highs on the 4 hour chart. So that is what I'm watching on UniSwap. Again, also you want enough momentum here on these Stoke RSIs. And that's one thing that I'm watching over there. Okay, I think that pretty much does it. A very short and sweet update. I think there was one more thing that I did want to cover. Let's just have a look over here. Okay, looking at the 1 hour, let me just quickly cover this since we added. Very important, this level needs to get cleared over here. Let's give you the exact level. So this level over here, which is coming in. I'll put a price label for you. If you can start closing a couple of 1 hour candles above 19,900, again, it basically all comes down to that $20,000 psychological level. We need to clear that $20,000 psychological level to create on the 1 hour a higher high. That would confirm the bias that potentially there is an opportunity for this to be a relief rally. Then the other thing that I wanted to outline on the daily, this was the last thing. Let's just take that off. Okay, so I am completely aware of this, by the way, for those of you who are wondering. I'm going to draw a rough draft over here. So essentially what you have over here, you had this leg down, right? And then you created a bear flag that led to the next leg down. And now a lot of people, of course, are also looking at this as a bear flag. And this is why it's important to reclaim those levels and reduce your risk on the current trades, because the risk continues to remain to the downside. If this level gets lost, retest into that mid-range area, reject off of that and come back down lower than this area on the left-hand side. All the prices have been outlined in the daily candle newsletter, as well as what I just showed you on the 4 hour. Then this bear flag becomes a real possibility. Bad CPI print could be the catalyst, and that would send it much, much lower. I mean, you're talking about anywhere between 12 and 16K. So control your risk, manage your risk, be very, very careful out there. There is a lot on the line at the moment, and it is a tough trading environment. Make sure that you have a look in the description below. Follow me on Twitter, use the right link. Everything is over there if you care to see what I do in my daily life. The Instagram link is there as well. You got the ByBit referral, Bitget referral. Everything is over there. That's it, pretty much. Quick show, very fast update. I will most likely be joining Sheldon on another show in a couple of hours' time. By that point, we'll have much more information because the CPI results are going to be out. So guys, that is it. Thank you so much for your time. Thank you very much for joining. I'll see you all on the next show, and cheers for now.